Alrighty, guys, we have another big week coming up this week for the stock market. We have 7 companies to break down in this video. You guys know the drill. We'll break down the earnings estimates because all of these are set to report earnings, and we'll break down the charts, my thoughts, what I'm looking to do. So if y'all find value, hit that like button, make sure to subscribe, and you might as well follow me on X as well at Stocks Talk Stocks, link down below. And don't forget to get your free stocks for Moo. Once you open up your account and fund it with at least $100, you get a free share of SoFi stock and 5 other stocks, each up to $2,000, guys. So it's a no-brainer. Use that link down below. And with that being said, cheers. Let's dive right into the video. So you all know at this point, the stock market's been on fire. I don't want to focus too much on the indexes in this video, but you all know SPY's up a ton over the past couple of weeks, and now we're actually at a big resistance at about 452, which will be interesting heading into this week, guys. We have Triple Q also up massively. You guessed it, right? We can see this is actually trading at a 4-hour high right now. It's at a high on the 4-hour chart, and this is up around, let's see, from the lows 342 up to about 389. It ran 14% pretty much in less than 3 weeks, whereas SPY, I forgot to tell you guys this, it ran up, let's see, about in that same time period, roughly, it ran up, let's see, about 11%, 10-11%, not too bad, but obviously not as much as Triple Q, because tech has done fairly well over the past couple of weeks as earnings came out, yada, yada, yada. You guys know how it's been going on. So that's kind of a quick rundown on the indexes, really nothing much at all. I mean, we're up against a big resistance right now on SPY and Triple Q even. So let's see what happens this upcoming week. And with that being said, guys, let's just dive into these stocks. Let's break down these earnings, the charts, what I'm looking to do. Starting off with number 1, which is Nvidia. Let me pull it up and show you guys. Nvidia is up on, I believe, Tuesday. Let me double check, the 21st, right? Yeah, the 21st after the bell, which is on Tuesday. We have Nvidia, which is by far and away, in my opinion, the biggest, most anticipated earnings for this upcoming week. So they're on Tuesday after the bell, and they're looking to do EPS of $3.10, and these are all estimates, by the way, guys, versus the 58 cents from last year. So, I mean, that's crazy, guys. 58 cents last year. Now they're looking to do $3.10, pretty much a 6x year over year on EPS, and revenues projected to come in at a little bit less than $15 billion at $14.89 billion. And you guys can see the stock, of course, is breaking out, heading into earnings like the entire stock market is. Again, we showed you that. I showed you that. Markets are doing very well. Nvidia is doing very well as well. It's above the moving averages on the 4-hour chart. We have a golden cross, and we're breaking out of this channel, which is really good for the bulls. And now we're pretty much a stone's throw away from the recent high, being about $520 per share, which you guys probably remember. We hit that in the end of August, which was a couple of months ago. And with Nvidia around earnings, at least the past 2 quarters, this stock has gone ballistic to the upside, right, after earnings came out. You all remember a couple of quarters ago, back in May, the stock went from 300 all the way to 410 after earnings, and recently in August, the company reported and went from 425 to 520 days after the earnings, or right around the earnings period. So if we look at the previous 2 earnings reports, you can make an argument that, all right, we're getting ready for another breakout after earnings. But the thing is, guys, you can't be so sure. That's what, that's the reality when it comes to trading around earnings. You cannot be so sure. And just because Nvidia ripped in the last 2 times they reported doesn't mean they're going to do that again. It does not mean they're going to do that again, but we're still going to be watching it, obviously. And me personally, I'm not a big earnings trader, meaning I'm not going to be buying calls or puts or, buying shares, gambling on the earnings, before earnings, right? Maybe afterwards, if we get decent numbers and the stock is looking pretty interesting, maybe I'll play it then. But for me, I'm kind of just going to ride it out and see how it plays out on Tuesday, and we'll go from there. Because again, this thing's pretty extended right now heading into earnings. And yes, it's broken out in the past 2 quarters after earnings, but that doesn't mean necessarily that it's going to do it again. And keep in mind, in under 3 weeks. Nvidia's up over 24%, which is just unfreaking believable. So keep your eyes on Nvidia on Tuesday and obviously on Monday tomorrow. This one's going to be going all over the place probably in anticipation of earnings. So keep your eyes on Nvidia. Lowe's LOW is another one that is kind of trying to crawl its way out of this hole. It was at 237 back in July. Also back in early September, we were at 230, 235, and we went all the way down to 181. That was a drop of 21%. So we got ourselves into a bear market, and now it's been slowly reversing. You guys can see we're above the 50 SMA. We're off the lows about $20, which is nice. So Lowe's is on, let's see here, guys, Wednesday, I believe. Let me double check, though. No, Tuesday morning, same day as Nvidia. So they're looking to do EPS of 303 versus the 327 from last year, and revenue estimate is 20.88 billion, which I'm not sure what they did last year, but overall they're looking to decline a bit on EPS and revenue. Again, not too sure what they did last year, so I'm not sure what the comparable is, but you guys can see we're approaching a big spot of resistance. Not only the 180 SMA on the 4-hour chart, but also the highs from the middle of October being about 205, 200. So if we break out of, let's say, 205, we start breaking out of this resistance, maybe we do get a breakout on lows, maybe after earnings, maybe coupled with good earnings. It could cause this thing to break out. So keep your eyes on lows. BBY is another one for this week, which is Best Buy. You guys probably know Best Buy, right? They're looking to do EPS of $1.18 versus $1.38 from last year, and revenues projected to come in at $9.9 billion. And this one is also very beaten down. You guys can see this stock was at $85 per share back in the end of July, and now it's at $68. It is down about 20%. So it's in a bear market right now. And if we do start breaking above maybe the 180 SMA at about $70, let me set my alert there right now. This could be gearing up for a breakout, maybe towards low mid 70s initially, and we'll see where it goes from that point. But of course, with earnings, guys, nothing's guaranteed. But we do have earnings on Tuesday in the morning on the 21st, and we'll see how they play out. And let me see the 3-year chart. Yeah, man, this is not looking good at all on the longer time frames. You all can see BBY was back in 2021, about 2 years ago. It was at $140 per share. Now it's at 70, so it's cut in half pretty much in 2 years. And here on the max chart, you all can see we're approaching a big resistance, or a support rather. We're at a support now at about 50 to 55, $60, as that is the overall trend line here, or that's where the 180 moving average is here on the max chart, which we'll see if we do bounce off that point. It looks like right now we're starting to, but we're not fully getting the breakout. So the fourth stock that I want to break down, guys, is HPQ, which this one we are actually getting the breakout. We're above the moving averages. We have a golden cross, which is nice, and we have earnings coming up on, I believe, let's see, 21st. So all of these are on the 21st, it looks like, for the most part, right? That's after the bell on Tuesday, HPQ is reporting. So I'm keeping my eyes peeled on this one, as again, it's starting to reverse. We have a golden cross. That's nice. So they're looking to do EPS of 90 cents versus 85 cents from last year, and revenue of $13.83 billion versus $14.8 billion from last year. So their revenue is actually going to cut about $1 billion, or it's going to be cut by about $1 billion from last year. That's going to be down about 6 to 7% year over year. So keep your eyes on HPQ. Another thing worth mentioning is this is approaching a big resistance. You guys can see back in April, May into June, we held support at about $28. We broke under it. It became resistance. And again, now we're starting to reverse, but we're not fully breaking out until we start to take out that new resistance, which we're at it right now, $29. Let me set my alert. That's going to be a big spot. So if we do break out of there on HPQ. Maybe some more upside, but until then, I'm sitting on my hands. I'm being very patient. And the next one here is DKS, which is Dick's Sporting Goods. This one's also slowly starting to reverse. We have a golden cross. We're above the moving averages here on the 4-hour chart. Earnings are set to come out, I think, on Wednesday. Nope, not on Wednesday, guys. On Tuesday in the morning, the 21st. So they're looking to do EPS of $2.45 versus $2.60 from last year on revenue of $2.95 billion. So Dick's Sporting Goods, last time they reported, my goodness, their stock got destroyed. It went from 150, 145, all the way down to about 108. That was a massive drop after earnings, 26% like that. And since that point, we've slowly been consolidating, and now we're starting to break back up into the earnings. So this is one that I'm going to be watching closely. We do have a big resistance coming up at about, let's see, 120 to 122. That was support in the end of May. So if we break out of there, let me set my alert at 122. Let's do that now. Mark is at or above. Maybe we start ripping from there. But until then, guys, I'm going to be patient until we retake that 122. So before we break down the last two stocks, guys, don't forget to get your free stocks for Moomoo. Just simply use that link down below. Open up your account and fund it with at least $100. Once you do that, you get 5 stocks right off the bat, each up to $2,000, and you get a free share of SoFi stock as well, totaling 6 stocks. And guys, listen to this. If you want to up the ante a little bit, fund your account at least $1,000 on top of those 6 stocks you already got. You get 10 more stocks, each of those being up to $2,000 as well, totaling 16 free stocks. So if you want to help out the channel and you want some free money, why not? Who doesn't like free money? Use that Moomoo link down below, or go to stocksurfest.com/Moomoo, get your stocks. And with that being said, guys, let's break down the last 2 stocks that I'm looking out for, watching closely this week. And again, all of these are set to report earnings. So the first of the last 2 is John Deere, Deere & Company, ticker symbol DE, which today ended up, well, not today, today's Sunday. Geez, guys. On Friday, it ended up going up 1.5%. You guys can see that right here. Pretty good day, and it's actually now approaching a massive level of resistance, being that 180 SMA, which you all can see over the past couple of months. That's where DE's gotten rejected time and time again. You guys see all these all these markers of resistance here. So we do have to break out of that. Maybe after earnings we will. Time will tell. Not guaranteed, of course. But they're on Wednesday in the morning, pre-market, and I'm gonna set my alert. Let me put it at 390, a nice round number, $390 per share. So they're looking to do EPS of $7.47 versus $7.44 from last year. So pretty much right in line. And revenue $13.58 billion versus $14.35 billion from last year. So that will be down about 5.5% year over year. And for me, guys, again, I'm not a big earnings trader, but I will consider this if it starts to break out above 390, maybe after earnings. Time will tell, guys. Time will tell. So keep your eyes on DE. And the last one is, drum roll please, ZM. Ticker symbol ZM, which you guys know is Zoom Communications, video communications. And this stock was once, what, $600-700? I mean, geez, guys. $600 almost. And now it's at 55 or 65, whatever it's at. $64 per share. So they're on, I think, Tuesday or maybe Monday, actually. Yeah, they're Monday. So they're tomorrow after the bell, guys, on the 20th of November. They're looking to do EPS of $1.08 versus $1.07 from last year. And revenue, are you guys ready for this? $1.12 billion versus $1.1 billion, up a whopping 2% year over year. Not looking too pretty for the revenue growth, guys, when it comes to Zoom. And you guys know this was the darling of the pandemic. I mean, this thing was heavily used. It's still used, obviously, but not nearly as much. And the air has come completely out of the bubble when it comes to the stock, no doubt about it. Maybe not completely. You could argue there's more downside to come. But yeah, this thing has not been, in the bulls' favor at all. It's been downtrending for years now, and it's really had no, it's had some times where it's seen a bit of a rally, multiple rallies, but they've all been met with lower highs, followed by lower lows. And at this point, guys, we are technically on a rally. We are up from 58 to now 64. We are up 11, 10%, whatever it is. So be careful. Be careful with Zoom. That's all I got to say. I mean, this thing, I doubt it breaks out. Maybe it does. I don't know. But just judging off the price action from the last 3 years, I'm not too confident when it comes to Zoom video communication. So what do you guys think? Let me know your thoughts in the comments. Feel free to hit that like button. Subscribe here on YouTube. It's free. And you might as well follow me on X as well, at Stocks Talk Stocks. Link down below. And I'll catch you all in the next video. Cheers.